if you're going to be faced with significant demographic issues, you better have invested significantly on your productivity. Otherwise, you're going to see your GDP growth going down.
Today's episode is brought to you by Teucrium. Learn more about how agricultural commodities can play a role in your portfolio by clicking the link in the description. Very pleased today to be joined by Maria Vassalou, head of the Pictet Research Institute. Maria, welcome to Monetary Matters.
Thank you for having me, Jack.
Maria, I'm glad you're here. Like many other financial programs, most of what I and my guests talk about is a little bit more short-term projections, predictions, and relatively low confidence. What is GDP going to be next year? No one really knows. But the topic that we're going to be talking about today, as you noted in your research paper, is actually something that we have a very high degree of confidence at, which is rare in macro, rare in economics. Today, we're going to be talking about demographics and the aging of the population globally, and also the decline of the population. So tell us first, what gives us a greater certainty about this trend than in other fields of economics? And also, just tell us about the scale that we've had over the past 40, 50 years of aging populations, declining birth rates, as well as what the future portends around the world. Because some of these predictions, I'm just going to warn our audience, they may seem extreme, and it's going to be a radically different society.
Yes, unlike GDP growth or inflation or interest rate projections that can change very much, and they're affected by a number of factors in short horizons, demographics are really based on the number of births and also deaths, obviously. But it takes a long time to change the birth rate of a society, and obviously for a baby to become a productive member of the society. So the projections that we have about the size of the next generation and how that is likely to evolve going forward are far more robust than in any other field of data we have. And it is the case that globally, and not just in the developed economies, as economies get more affluent and consumption levels increase, birth rates go down. So we are mostly aware of the issues in demographics in countries like Japan or China or Europe, but in fact, it's a global phenomenon. It's just a matter of time when other parts of the world will start declining. So in 20, 30 years, we will see similar tendencies also in India or in Africa. So nobody is really escaping from that. It's just the developed world has a more acute problem. So the projections are that over the next 20 to 30 years, the dependency ratios in most of the developed world will be over 50%, which means that the people who are aged above 65 will be more than those who are between the ages of 15 and 64. So that means that you're going to have a much more aged population relative to the numbers of people who are active in the labor market. In some economies, like in Japan, this ratio could be as high as 73%. Italy is another country with really very high such dependency ratios. It is projected to reach 70%. But even countries like the US or Anglo-Saxon countries that fare a little bit better are not necessarily, escaping those issues.
So that elderly dependence ratio, which is the ratio of population over 65 relative to the population of 15 to 65. So that ratio has creeped up over the past few decades. In the United States, that's 27%. By 2050, the Pictet Research Institute and the UN World Population Prospects forecast it to be 38%. In China, it's 21%, forecast to be 52%. And you also write that by 2080, that number could be over 100%, meaning that in 2080, there are more senior citizens over the age of 65 in China than there are adults between the age of 15 and 65. What are the economic consequences of this? in terms of inflation, growth, GDP, but also GDP per capita, and then also productivity, profitability, and the like.
So, if you take a simple production function, you have capital, you have labor, and then you have technology. And so, it's always the case where labor gets expensive and capital is trying to replace labor in order to avoid the cost of labor. But in this particular case, it's not just that it gets expensive because it gets organized and it requires a higher return on their human capital, but it's just becoming more scarce. And because of this demographic issue. So, if you have a production function where labor goes down, you have to find something to substitute for labor. Otherwise, the output is going to go down. And if the output goes down, then growth is going to go down if that happens throughout the economy. So, what is the remedy there? Well, the remedy is basically technology. And that's something that has been used throughout the ages, but now it becomes a far more acute issue because we actually need to have technology that can directly replace labor as the labor becomes more scarce on the one hand, but also make the existing labor far more productive than before. So, this is the process underway. And what we're looking at in our study is actually the intersection of demographics and technology. Because when people talk about these topics, they tend to talk about them in isolation. So, if you just look at the demographic numbers, as you mentioned them before, and there are many more in the study, they all look very gloomy. And so the conclusion is that we are going to get extinct, and who's going to take care of us, and how are we going to create enough to support the remaining population. On the other hand, if you look at technology, and especially the technological revolutions of the last decades that are primarily focused on robotics and AI, those also look very scary because obviously they replace labor in a very obvious way. And the projection or the fear that these technologies create is that they eliminate jobs without creating new jobs, and therefore they're going to lead to unemployment. Now, when you think about these two topics of demographics and technology together, in fact, the development of these technologies, the robotics and AI, may be coming at a very opportune time when we actually do need technologies to replace labor that we will no longer have available due to the demographic decline. And so the conclusions that one can reach by examining them in combination to each other are very different and less negative and gloomy than in isolation.
And so I want to ask you about technology, but just a few more questions on demographics. The lesson from Japan is what? Because you have these two opposing forces. If you have fewer workers, fewer younger people who are working, that is going to bid up wages, which would be inflationary. At the same time, fewer people who are in their 30s, 40s having kids, that is deflationary because consumption as a share of income is quite high from the 20 to 50 than it is in senior citizens. Okay, you have those two forces, and you cite different economic literature, one saying inflationary, the other being maybe less inflationary. The lesson from Japan and other aging societies is what?
If you have a smaller population that consumes, that by itself will be deflationary in principle overall in the economy. The thing is that the answer is not so clear cut because as populations age, they also change their consumption patterns. So there will be some sectors that would see an increased demand, and other sectors may see a decreased demand. So it could be that overall, as the number of people in the economy go down, that's overall deflationary, but you may see more inflation in particular sectors of the economy. And depending on where you are in the different age groups, you may experience inflation a bit differently. Technology by nature is deflationary because it improves productivity, it improves output and efficiency, so it tends to be deflationary. Now, Japan is a country that has faced demographic issues earlier than other countries. And as a result, it had to grapple with this issue before the rest focused on it. And Japan has also been adopting technology since a long time ago. And they're pioneers in automation in certain sectors. So we see Japan leading in a number of these areas. And the effect, as we have seen through time, is that Japan hasn't experienced significant inflation. Post COVID, we saw a little bit of inflation, but that's also for other reasons.
So, is what is coming for the rest of the world the Japanification of everything in terms of deflation, lower demand, lower growth because of this?
Not necessarily, because if you are careful in using technology, Japan has used technology quite effectively in many areas. There is a lot more to be done. And there are two types of automations you can have. You have automations that replace labor, and you have automations that enhance the productivity of existing labor. And so Japan has done quite a bit on the first part. There is still a lot to be done on the second part. And this is an ongoing process. So no country has really gone to the full extent of this process yet, primarily because these technologies are relatively new still, and not they haven't reached their full diffusion stage. It doesn't necessarily mean that all economies will stagnate and we're going to see a situation of low growth. In fact, the GDP per capita could actually increase significantly if technology is used productively in the sectors that will see the most demand as we are transitioning from a younger society to a more middle aged society, and then later on to a more aged society.
And if we can say with a high confidence that aging societies are disinflationary, technology that is going to help with that is deflationary, is that bullish for bonds, that the ages of a 10% 10-year yield around the world or a double digit 15% bond yields are behind us?
We are in a world where we have high levels of debt around the world. We are at a time of quite significant geopolitical changes that affect the flow of capital. We are also at the time of various countries, and particularly the US, considering a process of reindustrialization to improve economic resilience. And that's something that it's also discussed in various forms in other parts of the world, including in Europe. So all these things have effects on inflation, and they have effects on interest rates. So to the extent that the global economy becomes more segmented, the flow of capital is not as free as it was before, that's going to lead to higher yields going forward. But at the end of the day, what matters is also the total debt levels, the relative debt levels of the different countries, and the growth rates. So it's not just how much debt stock of debt the US has, but it's also how fast it grows going forward. Because traditionally, US hasn't paid back its debt when it accumulated a lot of it. What it did was it increased its growth rates, and therefore the debt to GDP ratio went down.
And that's what happened after the 19 World War II in the 1950s is growth just drastically exceeded the level of debt growth. I want to ask about that because that was the baby boom. You know, it's so rarely get to talk about this. It's such a fascinating topic because I believe in the US, like the total fertility rate, births per woman, was basically at two. So at or maybe even slightly below the replacement rate in the 1930s. Obviously, you had the Great Depression, but after World War II, we had the baby boom, and it really was a boom in birth, a boom in fertility, and I believe it coincided with a increase in wealth. So as people consumed more and their incomes rose, uh, uh, they had more children. What is the likelihood that that could ever happen again, or is it kind of an anomaly of people getting richer but also their fertility increasing? And also, what, if any, a positive effect on fertility does the so-called like natalist policies in Hungary, where okay, you're a woman and you have a certain number of kids, you get a tax cut, you get a tax credit, and then like, and I mean, an extreme version of just basically taxing people who don't have kids. Like, I'm not suggesting that at all, but just what is possible to reverse this trend of declining fertility?
There have been various policies or attempts around the world to affect the rate of fertility. France is a country that has tried to do a lot, and it has managed to marginally affect the rate of fertility in the sense that it hasn't gone down to the same extent as in other countries like Italy, for instance, or Germany and so on. But certainly economic incentives help, um, and there are also cultural changes that have happened. So it's not just a matter of increased wealth, but also the culture of societies has changed. The role of the family has changed. The relationships of women and men have changed. The role of women in the workforce have changed. So all these things, the nuclear family and the extended family and the support that one needs to raise children has changed. So all these things have an effect on the ability of people to afford to having children and to be able to raise them properly. So there are many factors, and our work does not really focus on what causes this decline on fertility. We take it for granted and we try to focus more on the economic side. I have read reports of people saying that, for instance, even the proliferation of social media have a negative effect on that. But this is not within my expertise per se.
Yeah, I respect that, and also, you come from a finance background, formerly had a senior role at Goldman Sachs in investing. Like, the importance of trend following, and I'm looking at since the mid 1960s, there's only been 1 year where fertility rates increase. So that's a pretty strong trend. So I do take the wisdom of kind of it, just take accepting that as a given going forward. Okay, Maria. So we
Yeah.
accept as a given around.
Yeah.
Go ahead. Sorry.
There have been a lot of changes since then. Societies have become much more progressive. There has been, birth controls that have been used extensively. Abortions are legalized. It's socially acceptable to have abortions. So there are all kinds of things, obviously, that affect the outcome. There are also reports of the quality of food or lifestyle that affects fertility rates. So there are a lot of factors that come into play in affecting this trend.
Do you and other economists who focus on this, demographers, do you guys have a sense of a potential bottom in fertility? Like, I believe the lowest rate now is South Korea, 77 basis points of fertility rate or birth per woman, something like that. And do the models factor in? I mean, it can't go to zero, right? It can't go to zero. Do the models factor in what is an asymptote of the dotted line where, okay, here, this is the bottom, or what do the models say about that?
I think the data we use are based on the official databases that make the projections that this trends will continue. I don't think that they project a reversal in the trends. I think at some point, I hope that the societies and people will realize that this is not necessarily the right way forward, and there will be some changes. But we also are at a time in our lives and our history where we are going through a lot of very rigorous debates about social matters, about economic matters, and suddenly there is a realignment of geopolitical priorities and economic priorities, and all these things I think will have an effect on the structure of the society, and that ultimately will affect the birth rates. But no, the existing models, to the best of my understanding, do not really make projections about a reversal of this trend.
But do they have a bottom in the fertility rate? Like, is like what happens if what do the models say if the fertility rate goes to 10 basis points?
Well, eventually, asymptotically, the population will get extinct.
Yeah.
But obviously, humans at some point, I think we are built with an instinct to spread genes. So eventually, this survival instinct should kick in.
And so a lot of the fertility rates in the forecast from the UN World Population Prospects 2024 actually show them bottoming out and very marginally increasing, not to like at levels at the total the sustainable rate of like minimum up 2.1, but just like basically bottoming out and maybe slightly increasing. And so a lot what I'm saying is a lot of the consequences of this are already baked into the case. So even if total fertility rate stops declining and it only stays flat, that still is going to cause this. And population change, like in Japan and China, it's going to happen based on what's already happened over the past 20 years.
Yes, it will. It will happen. Now, as you mentioned before, governmental policies could, at the margin, affect this trends. The question is how significant those policies are in making a difference. So you hear about people receiving an extra $1,000 or euros if they have an extra child, but anyone who had children knows that the cost of raising a child is many times higher. So I don't think that these small amounts will make a huge difference. But I think it's more of a cultural change that it's needed. But yes, the thing, what we should take away is that there is really a decline in the population due to all these factors that we discussed. It could bottom out at some point or remain at the low levels. The question is, if it stays at those levels, what are the economic consequences and what you can do about it? And that's where technology comes into the picture. And so that's really where our work focuses on.
Are you a sophisticated investor concerned about today's markets? With the ever present potential for stock market corrections and the risk that bonds won't provide the hedge that they used to, you may want to consider adding an asset class that has historically offered stability when you need it most. The prices of agricultural commodities such as corn, wheat, soybeans, and sugar typically move to their own rhythm, driven by factors like weather and geopolitics, not the factors that move more traditional assets like stocks and bonds. Since inception in 2012, every time the S&P 500 has had a correction of 10% or more, the Teucrium Agricultural Fund Benchmark Index has outperformed. Getting exposure to agricultural commodities has always been tough for individual investors, and while it's not possible to invest directly in this index, Teucrium offers ETFs designed to give investors price exposure to these markets. If you're a professional investment advisor or a self-directed investor managing your family's wealth, click on the link below to learn more about how incorporating agriculture into your portfolio can help diversification and protection. Thanks for listening. Let's get back to today's interview. Just to read from your piece, you say that the demographic inflection point fundamentally threatens traditional engines of economic growth as fewer workers must support more retirees. This shift is already reshaping consumption patterns. Aging populations spend more on housing, healthcare, and food while reducing expenditure on transport, clothing, and recreation. Without interventions, these demographic headwinds would lead to an economic decline. So, talk about the role of technology, and in particular, where is the return on capital going to be higher in this very aging world, different than it was in the 1960s? Is what you're saying that investment in healthcare and housing is going to be higher than transport and clothing because on the margin, more elderly population, aging population spend more in those categories?
Yes. So when we examine consumption patterns as people transition from young age to middle age, they change their consumption preferences. They spend more on housing, on food, on healthcare, on things that are really core to their daily lives, and they have to cut down on other things. And these tendencies get exacerbated as they age further. Now, the question is, when you look at all these different sectors, how can technology help in the production of the goods that these populations need? Because that's going to affect both the inflation rate of those sectors, so the pricing of those sectors, as we discussed before, but also the overall growth rate of the economies and the GDP per capita, if you like, of those economies. And so, when you look at different technologies, there are three factors that are important for the proliferation of those technologies. They all start as an elusive idea, and then they go through a process where this technology has to become cheap enough to be able to be diffused and adopted more widely. So, an interesting example we offer in the study is that of electricity. So, electricity was invented 50 years before the first block, a residential block in Manhattan, got electrified. Why? Because it wasn't really economically viable before. But you also need two other factors. You need enough number of people who have the skills to support this technology in the it's in its diffusion, and you also need the institutional support. So you need the infrastructure, you need the regulations or whatever this technology really requires in order to be able to diffuse it. So when you look at all these different sectors in the economy, uh, you need, first of all, to reach a certain stage with this technology so that it can be diffused. So when we look at robotics, for instance, they are now at the stage where they have been developed a lot. They're not at the peak of their diffusion, but the process is continuing, and it's likely to have a very significant effect on productivity and efficiencies in the production functions. And then you have AI. And AI takes the robots and makes them smarter, so they can do more with the same resources. This is a process that has not yet been fully developed. We're still at very early stages of this technology, and there is a lot of speculation of how far it can go and what it can achieve. So, when we're looking at the different sectors of the economy, there are some criteria that we think are important in selecting also investments and looking at the prospects of a particular sector. So, it's whether a particular sector is conducive to automation. So there are certain sectors that you can't really do anything about it because they're very much rely on an interpersonal, interaction. But sectors like housing is very conducive to automation, not only in terms of smart houses that people often think about, but also in terms of the production of materials that are used in the construction process. So that's one. The second one is to what extent that particular industry is going to be in demand given the demographic changes. And the third is whether there is the institutional support in the economy where this sector is being developed to really enable the diffusion of this technology. You can have as much automation as you like, capable to be applied in a particular sector, but if in that economy you don't have the resources to implement this technology, or let's say this technology is very energy demanding and the cost of energy is very high. So the use of this technology does not really become very attractive, then the effect you're going to have is going to be much lower. So it's very much looking through all these factors and how technology can mitigate the effects of demographics in a way that not only replaces part of the lost labor, but also enhances the productivity of the existing one and leads to higher growth rates.
So, a very early example of this would be the horse replacing a lot of human labor on the farm, and then a mechanized tractor replacing the horse.
Right.
Output goes way up, input goes way down in terms of labor for both the human and the horse, and so productivity just explodes, and that has been an incredibly good thing for economic growth over the past 100 years or so. So, tell us, is your model for AI like that? Is it similar to electricity, which you referenced, similar to the telecom boom, the dot com boom, the rise of the internet? You have a chart showing the growth rates of those over time, in particular, their initial changes to productivity and their long term results in productivity, showing actually that, at least in terms of how the data measures there can be a short term decline in productivity, which I didn't know before reading your paper.
Yeah, so actually, all these technologies built on each other. So you needed electricity to come up with the internet, and then the internet really helps collect a lot of data and organize them and engage users. And then all this knowledge that it's being created is used in the production of robots. And then AI comes to put intelligence in these physical machines who are the robots. So they're interrelated, but when you first come up with one of these technologies, initially you have some initial investments, there is proof of concept, you need to build the infrastructure, you need to really reach some level of adoption, if you like, in order to make them economically viable. And during that period you may have a decline in productivity, and so all these technologies have a J curve. But as the one technology builds on the other, and there is learning in the process and complementarity in these technologies, in fact, what we're seeing is that more likely than not, this negative part of the J curve becomes less negative and shorter, if you like. And we think in the case of AI, we are close to getting out of that negative part in the coming years. And so we're likely to see um, more increases in productivity. But it's also another topic which is important, is how these technologies are actually applied to minimize societal effects, negative effects. And that's where also policy issues come into play, regulations come into play, and so on.
Our viewers can see that chart on the screen, which includes both historical data as well as projected data for AI. I don't know if it was Paul Krugman or another economist who said you can see the productivity boom of the internet everywhere in the actual productivity statistics. So for a while, maybe in the early 2000s, productivity actually was, at least in the US, was not looking too good, even though we had this huge internet boom. Did you attribute that to, and do other economists attribute that to this J curve where at first productivity declines? Or did it decline for some other reason and actually the internet was a very productive force? And also, I know the productivity stats right now have been quite good. Fed Chair Jay Powell actually referenced them in the December Fed meeting. Are you attributing the high productivity numbers to the fact that the internet actually is making everyone so much more productive? Or is AI already making things productive? Or you said that maybe AI is still in the decline part of the J curve?
I wouldn't say that the AI per se is net a positive contributor yet, but it is at the stage where it is showing the potential. It can produce the productivity space, but there is still a lot to be done there. I think there are a lot of issues in the past about measurement of productivity, also in terms of the use of those technologies at initial stages. They also displace labor that needs to be repurposed, and that in the meantime can lead to a lower overall growth in the economy and lower productivity. You need to build the skills related to that particular technology. So there are all these factors that can lead to a dip in productivity. And it has always been the case since the example you gave with the wheel that uh, the card. You eliminate some jobs, but you create other jobs. So the fear now with these new technologies is that you will eliminate jobs and not create others. I don't necessarily share this pessimistic view, because I think that what will happen is that humans will be forced to really think, be more involved in higher value added activities than in the past, activities that involve critical thinking, activities that involve creativity, the creation of new products, new applications, new ideas. So, in a way, we may actually be entering an era where we are called to use our brains much more productively as a population, rather than having only a minority of the population doing that and the vast majority doing simpler tasks.
And a lot of AI right now is focused on large language models, which would replace or augment a lot of so-called knowledge work, writing emails and the like. You focus on that, but you also focus on robotics, so automating tasks in the physical world for industrial purposes. So tell us just about your outlook here about how increased automation is going to lead to enhanced productivity. This has been happening for 100 years, but are you saying that the rate of automation itself is going to increase because of robotics and AI powering those robotics?
Yes, and the thing is that in the past, part of the whole idea of globalization was that you can produce somewhere else cheaper, and we can get specialized, and overall we can improve or increase the global output, and then that would be positive for everyone. The problem with that is that, yes, you can have globalization and you can have regional specialization as a result, but we never had a global government that would take the resulting surplus and distribute it in a way that would make everybody better off. And so, as a result, we had this backlash of the recent years against globalization that has led to the situation that we're experiencing now. Now, robotics, on the other hand, reverse the argument that we need to produce somewhere cheaper, because we can actually use robots in any location and closer to the consumption of the particular good, closer to the consumers, to produce the goods. And robots with AI can actually eliminate the need for a lot of labor. And that's already the case in Japan, in China. You go to factory floors and there are basically no workers there. There is probably just one person supervising the robots, and you can have full production as a result. Now, so the return of production in a country like the United States, which is quite often discussed lately, is not so much a matter of bringing back middle class jobs that got lost in the process. It's more a matter of restoring economic resilience, I would say, because this specialization that happened over time had also created a lot of economic fragilities and a lot of economic dependencies that we actually saw during the financial crisis, but also again during COVID. And so I think robotics and AI is going to lead the various economies to be able to be more self sufficient compared to how we have been in the past.
And a key point there is that employment as a percentage of manufacturing is going down, and that the drastic decline in manufacturing jobs in the US from 17, 18 million in the 1990s to 11 million, now 12.7 million. A lot of that was just that productivity increase. Like a China shock was definitely part of it, as well as the offshoring of jobs. But economists have argued, or especially economists have argued, that it would have happened anyway. A lot of it would have happened anyway, regardless of globalization. That just automation increases productivity, which means fewer workers.
Yes. And reindustrialization of the US or any other country, Western country, would not lead to a significant increase in manufacturing jobs. So I don't think that should be viewed as the goal of that process. The only reason you should be doing reindustrialization is to gain economic resilience, not really to create manufacturing jobs for the purpose of having manufacturing jobs.
And so you've got some data, I believe, from 2022 on robots per 1,000 workers across US, Japan, EU, and China. Tell us what you're forecasting in terms of an increase. So as of 22, correct me if I'm wrong, but you have that in the car industry, the motor industry, 140 robots per 1,000 workers as of 3 years ago. I expect you're projecting that to increase. Tell us about that.
We list various industries there, and the auto industry is one that has been more robotized, especially in the US. In countries like Germany, we see that it's less robotized, surprisingly. But I think where we're going to see significant gains is in other sectors where the use of robots is lower, and it can be increased, and that's really where we're going to see the gains going forward. Not so much in automobiles. Also, as societies age, we project that the use of automobiles, the consumption of automobiles, will be decreasing. So that industry by itself, it's not going to be a flourishing industry going forward.
Okay. What are going to be the flourishing industries going forward?
But some of the flourishing industries, or rather the industries that are likely to do better, are those that are related to housing, from materials to appliances to various automations in housing that can lead to more efficiencies in the living conditions of middle-aged and older households. Obviously, healthcare will be an important sector. The food industry will also be important. Automation can be used significantly in sectors like even agriculture, but also packaging, processing, and so on. So these are industries that, in a way, they're the old economy industries. So what we were considering in the past as old economy. But I think with the use of technology, they can become much more productive going forward and much more attractive also from an investment perspective. So when we think about technology, we shouldn't just think about the tech sector. So people usually just focus on the tech sector. Of course, the tech sector is important because that's where the actual technology is developed. But what is also important is where this technology is implemented and adopted throughout the economy. And so the sectors where we see that they're more conducive to the use of this technology are likely to see a revival, especially if they also correspond to sectors that the aging societies will demand more.
And so we've got a table 3 we can put up on screen, showing the winners and the losers of AI automation. The winners being housing, health and related industries, and food. and the losers being transport and clothing. So is this tell us about how this relates to AI, because to me, I see this just relating to aging populations of older people consume far greater healthcare as a percentage of their income compared to 20-year-olds, and far greater housing and far less transports. What is it about the those industries compared to the losers, clothing and transports, that has to do with AI rather than aging?
You're right that these industries really are less favored because they're not going to be the industries that the consumption will be focused on. They can still be automated to the extent it's not that they will disappear, but certain segments, perhaps luxury goods that are handmade, for instance, and therefore less conducive to automation, would be by default less in demand because the demographics do not favor them. And also, obviously, they will not benefit from these technologies. But it's this the losers are mainly driven by the consumption changes rather than the automation per se.
That makes sense. Tell us, what's your outlook on the AI investable universe? Let's stick with public markets if that's all right. So you have the enablers, the semiconductor companies that design and manufacture the chips. You have the companies that build the data centers, all the electricity, all of the copper, the silver, everything. Then you have the companies that own the data centers. Then you have the companies that rent out that compute to the customers. Then you have the true enablers, the customers who are buying all the compute to deliver AI to the end customers, whether it's people like me using a large language model or an insurance company trying to become more efficient. So, across that entire spectrum, where are you the most optimistic? Where are you the most, let's put it, skeptical?
What I would try to focus on is infrastructure around the use of AI. I would also focus very much on materials that are used in the process of AI. I would focus very much on energy, different forms of energy, and the cost of energy that will fuel the use of these technologies, and very much really infrastructure based investments at this point. And then very much applications of these technologies to sectors that are really driving the bulk of consumption in the various societies. And especially if you look at countries like in Europe, where productivity rates have been particularly low. So Europe has actually underinvested in productivity over the past decades. And if you look at the cross-country comparison of productivity rates in a number of European countries, those levels are zero or even negative, which effectively means that these countries haven't invested in capital deepening, which means really investing capital and making their workers more productive, or in total factor productivity, so the more efficient use of capital and labor, which effectively means that they're leaving money on the table. So effectively, they have suppressed their growth rates because they haven't been investing in this basic infrastructure, if you like, around productivity. So I would be very selective about different parts of the world that would most benefit from such use of technology. I think there will be a lot of opportunities in Europe, but it also very much depends on the institutional framework and policies that may be adopted there. But there you can have a lot of opportunities on the infrastructure space and the use of technology in the various industries that Europe has a comparative advantage relative to the rest of the world.
We've talked a lot about the AI and robotics augmenting and improving productivity in the physical world, producing goods. What about services? In the US, it's dominated by the services. So many people work in the services industry, how are you seeing the productivity boom from AI happen in the services? If instead of me writing 12 emails a day, the AI that I pay a very low amount of money for is writing me 2,000 emails a day, that's pretty good for productivity, right?
Yeah, but I'm more skeptical there because it's a matter of quality control. I'm very worried about the quality of the output in those cases, and we don't really have good data for the use of technologies in services. We have anecdotal evidence, but we don't have a robust database to cover services so we can do a serious analysis. But my concern with the use of these technologies in services and in creative fields is that they can degrade the ability of humans to innovate. And I think that's something where there has to be an emphasis, especially in societies with declining demographics. You need the remaining humans be particularly innovative in order to continue to exist.
Okay, so Maria, we talked about this demographic wave that is ahead of us, kind of baked in the cake already. And you said, Jack, don't be so negative, don't be so doom and gloom because we have this technology to help us improve. But here I am, Maria, sitting in the States, and the services industry is 80 to 83% of the US economy. And you're saying that this productivity boom is gonna be concentrated in the goods sector, which is only 20% of the sector. Why is the negative outlook reversed by the advantages of technology if the services industry, if you're skeptical about that? What's going to save us?
It's not that we cannot use technology to improve productivity in services, but in general, what we say in economics is that the productivity in the manufacturing sector is about twice as high as that of services. If you're going to see improvements in productivity through technology, the effect will be much bigger through improvements in the manufacturing sector than in the services sector. It doesn't mean there will not be any. We see that all the time, that there are a lot of automations that are being applied to services. And so we do actually make projections for productivity improvements also in in the services sector. We just apply much lower numbers there in our projections. So the improvements in GDP or productivity that we report take into account also improvements in the services sector. We just acknowledge that those are likely to be lower than in the manufacturing sector.
Okay, that's interesting. And tell me, within services, which is such a broad category, where are you most optimistic about productivity increases? Maria, I don't know if you've seen, but there are these movie trailers that are made with AI, humans prompting them, but with AI. And for I think a director to make a trailer like that, it would cost maybe $1 million or over $1 million, and I'm sure this thing costs a few $1,000s to make, maybe less. But the movie business in Hollywood in the United States has been a very challenging business over the past 10 years, very indebted, very low returns. The stocks are, as a year ago, not doing well at all. So maybe that could increase productivity and restore some profitability to that area. But the movie industry is pretty small. The healthcare industry is giant, at least in the United States, quite unproductive in my view. Where are you most optimistic, and where are you most skeptical about those productivity increases within services?
Certainly, the healthcare industry is one where there are the most applications and where we can actually see significant positive effects that can also lower the cost of healthcare in the US, but also globally. Because there we can use AI, for instance, for diagnostic purposes, cut down the time needed for those results to be produced, increase the productivity of each doctor. So, in the past, if you had an MRI or a CT scan, it would take several days to get your results. Now, the images are immediately read by AI that points out the problematic areas, if any. And so the doctor can focus primarily on those. And that speeds up the diagnosis, it increases the productivity of doctors. We've seen robotics employed very successfully in operations and so on and so forth. And so that's certainly a hugely promising field.
And what do you make just of these large language models and the rapid pace at which they are increasing, admittedly requiring so much investment we've never seen it before in terms of building out the chips and stuff. But I mean, it seems to me like the rate of improvement of, you know, just writing a prompt and having a computer give you an answer that is pretty effective and is, what do people do at work? They give answers. That's what most of knowledge work is. uh so you're tell us, like, when you see that, you don't think that it's going to cause rapid productivity increases. You're much more optimistic on the manufacturing side, just because that's happened before. That's what's been happening for 100 years. That makes sense.
Yeah, so it's typically technology is viewed as adding more productivity increases in manufacturing than services. But you're right that certain that this particular wave of technology could have a more significant effect on services than what we've seen in the past. We just don't have the data yet to analyze it and verify that empirically. But yes, so a lot of these large language models can be used for coding purposes, for mathematical problems, and these will greatly improve productivity of those people. So that also means that there is less need now for programmers as there was in the past. But then it's more a matter of where this large language models can be applied, what new products they can develop, and what new applications they can be developed.
Maria, if it's okay, I want to just share the screen. Let's see if we could do that. 'Cause you got these great charts and tables. I just want you to be able to reference them as you speak. So, this figure 12, what are we looking at here? And just explain to the audience across the different countries, China, Germany, Japan, US, across materials, chemicals, pharma, where are the biggest share of robots going to be doing productivity enhancing versus substitution? And just kind of explain this, because this is important.
Yes, when you look at robotics, you basically have two waves of robotics. You have those that directly substitute the labor, and then you have those that enhance the productivity of existing labor. So, usually, when you apply robotics, the first thing you do is a substitution. And so that's what leads this process. And we have seen that, for instance, all countries lead in that particular area. Germany is one that it's lacking behind, both in terms of substituting for labor, but also in terms of enhancing the productivity. And you see that this applies to different degrees in different industries. So it's more common in the motor industry and in computer and electrical industries. It is increasingly used in basic metals and machinery, but it's not used enough yet in chemicals and pharma. And these are areas where we may see more automation going forward. Also, if you look at the subsequent graph, which is figure 13, that different industries are at different degrees of automation in the various countries. So when the color is more green and deeper green, it means that they use higher levels of automation. And when it's red, it means that there is no really much automation, and it's to the extent that it exists, is mostly labor substituting. So certainly in areas like pharma, we in certain countries we still have room for improvement. In the food industry, we still it's not an area where that we see a lot of automation at this point, but it is an area that can be conducive to automation, and it's also one that will see more demand going forward.
All right, and Maria, tell us about this next chart showing a comparison of growth rates from 2024 to 2050 relative to the past 10 years. And this features in the negative of the negative demographic growth as well as the positive of productivity. So looking at Europe, US, Japan, India, China, how is the balance going to be against positive productivity growth, which is dragging growth up, versus the negative drag of demographic growth and declining working age share? What's going on here?
So, what we're trying to do in this graph is really to decompose different effects. So, to decompose the effect of the labor contribution to GDP growth and the productivity contribution. So, the purple squares show the average GDP growth over the past 10 years in the various countries. And the red dot shows the combined effect of productivity and demographic growth over time. So, what does this mean? It means that in order to maintain this level of GDP growth that we experienced over the past 10 years, what do we need to do in terms of productivity in order to be able to reach that level of growth, maintain that level of growth going forward? So the problem is that, as the pink and the blue bars show, we're going to experience a decrease in working age share of population going forward. So the population growth is going to decline in most countries, except the UK, Canada, and the US. There may see some increase in population growth, mainly because of demographic issues. But then when we combine that with the productivity growth that we've seen over the past 10 years, which is this green line, we see that the net effect of the productivity growth of those countries and their demographic changes is given by this red dot. And that shows that in countries where the productivity has been pretty low or even negative, as in some of the European countries, the gap between the average GDP growth and the productivity where it is now is huge. And so they need to do something to bridge that gap. Otherwise, they're going to see their GDP growth declining significantly. On the other hand, you have countries like China, where the productivity growth has been so great in the past that even if you factor in their negative demographics, which are significant, they're still gonna grow with a pretty robust level because they're aided by the high productivity rates that they have. Basically, what this table shows is that if you're going to be faced with significant demographic issues, you better have invested significantly on your productivity. Otherwise, you're going to see your GDP growth going down.
So on this chart, the purple square is the average GDP over the past 10 years. The orange circle, the orange dot, is what you are forecasting for the next 25 years from 2024 to 2050.
Yes. So so it basically forecasts that, assuming what we know from the UN database about the population growth, and assuming they don't do any extra investments in productivity going forward. So they just keep the steady state. They keep doing what they're doing. If that's the case, in certain countries, we're going to see significant declines in GDP growth going forward. Now, in other countries like China, the effect will be relatively small. Even in the case of the US, the effect is not going to be massive because the US, despite all the issues that we know, it does have positive productivity gains over the past several years, over the past decade. So even if it just stays at that level, it will still be producing a positive growth. Um, Japan, on the other hand, it still needs to invest much more because its combined effect of productivity and demographic growth is actually negative. In Italy, that combined effect is massively negative. And so the situation there is not positive. In Germany, the combined effect of productivity and demographics is marginally negative. So these countries that are experiencing significant demographic issues and they're not doing anything to improve their productivity rates relative to what they have delivered over the past 10 years are destined to see significant decreases in their growth. So the answer is not really so much immigration. The answer is really investing in technology to improve productivity.
And Maria, where does immigration play into all of this in terms of productivity and population growth?
Yes, so immigration has been used as a way to really mitigate the declining demographics. But actually, to me, if you look at all this demographic data that we discussed, what you see is that the problem is global. It's not in just one particular country, and it's just that different parts of the world are in different stages of this demographic decline, which is going to happen globally. So, immigration to me is a zero sum game. What you do is you take people from one part of the world and you move them to another part of the world, but the total number of people available in the world remain the same. And so you're not really solving any problem. It's a little bit like creative accounting. At the end of the day, you have income and you have expenses, and but you can move items from one part of your balance sheet to the other and make one part look better and another part look worse, but you're not really affecting the bottom line. Now, you can temporarily have a positive effect in the sense that temporarily you can increase the availability of labor in one particular part of the world through immigration, but that's only a temporary solution. You can't solve your demographic issue on the long run through immigration. And because of the demographic problem is global, and that even abstracts from all the societal issues and social issues that we're seeing being debated. So this is not a comment about whether we like immigrants or not. It's just a matter of numbers and how it affects the total availability of labor. And so, in my view, the only solution is really the only long term solution is technology.
I'm glad you brought that point up because I think economists over the past 10, 20, 30 years have talked about this fertility demographic issue, but they've said immigration is the ultimate solution. In fact, they've chastised Japan, saying, "Oh, Japan just needs more immigrants, and then this will be solved." You say no. When you look at every single country, an immigrant goes from a high fertility area country to a low fertility area. That doesn't increase global fertility at all.
Exactly. It doesn't. And the countries that haven't really relied heavily on immigration, what they've done instead is invest in productivity, invest in technology. And that has helped them a lot, both in terms of increasing their growth rates, but also having a better chance to maintain their growth rates and living standards going forward. So, countries that heavily relied on immigration have a number of challenges that we are reading about in the news and experiencing them on a daily basis. So, it's not a long term solution from that perspective.
Yeah, you do understand though why economists were so optimistic about it because they say, oh, we have an imbalance. We have a country with a very high fertility rate and countries with a very low fertility rate. We can just harmonize.
Yeah, but these people with a high fertility rate, when you move them into a developed country and put them into the framework and rhythms of life of the developed country, they also reduce their fertility rates. They also, depending on where, at what point you import them, they create, they also has to be an integration process, but that goes into more the political realm. The question is that you cannot really solve long term the issue of availability of labor through immigration, because at some point, even those countries that have a higher fertility rate will stop having it, and so there will be a net end date to that process.
What about investing in countries that have high fertility rates, the vast majority of which are low income countries? I believe the only middle to high income country that has a high fertility rate is Israel. Perhaps there are others. You tell me.
Yes.
But Africa has a very high fertility rate. Has many low income countries. What about what are you seeing for their GDP growth, their productivity, as well as the prospect of investing in those countries? I know people who have invested in Africa over the past 10, 15 years have not done very well in absolute terms as well as relative terms, but might that change? What do you think?
Well, labor is just one component of the production function, and in order for profitability to come about, it's not just a matter of producing. You also need the institutional support, the political stability, and in some of these countries, those things are lacking. So just labor availability on its own is not sufficient.
And so if these trends continue, it's looking like GDP will be flat for Germany, negative for France, and quite negative for Italy. So not great. Meanwhile, China and India, the productivity growth has been so high that if this continues for the next 25 years, growth will still be quite high, albeit slightly smaller than it has over the past 10 years. For China, India and China, but particularly China, do you think it is correct to assume historical levels of productivity growth? Because I'm sure you hear the argument all the time. So I hear it all the time that China is building the bridge to nowhere. And so much of the productivity growth has been from building infrastructure. If your population is aging and in some cases even declining, does it really make sense to build a million apartment buildings for people that aren't going to exist?
This is indeed something that China has been doing over the past several years, but that's not the only thing China has been doing. China has been having a very deliberate strategy of investing in new fields, in technology, in innovation, in science, and they're increasingly specializing in higher value added goods, in high technology goods. And I think from that perspective, they're likely to continue maintaining their growth rates and their productivity rates going forward. Also, China has a very long term strategic policy towards relationships with the rest of the world. And obviously, it has had its setbacks with the US and Europe to some extent in terms of the openness of those markets to Chinese products. But on the other hand, it has built bridges to the rest of the world, and particularly the BRICS, which is an expanding coalition. It has access to a lot of resources, commodities, minerals, rare earths, and increasingly research and development that will enable it to continue down that path. So, from that perspective, China is probably the best position to deal with these challenges ahead. US is also relatively well positioned, but it's not a time for complacency.
So Maria, you're quite optimistic on increased productivity in the goods sector, in services, less so, still an improvement, but less so. Given your moderated, bullish, positive outlook on services and knowledge work, what do you think of the massive sums being spent, mostly in the United States, but also around the world, in terms of AI data centers. So you have this boom of productivity. You've studied all these cycles. Often a feature is overinvestment, and then the return on invested capital is much lower than people think. What do you think of the hundreds of billions of dollars being spent per year on data center and chips in order to replace and augment knowledge work? It sounds like the people who are spending hundreds of billions of dollars, I think that they are probably more bullish on productivity than you are. If I was a tech leader and I had your outlook, I probably wouldn't be spending hundreds of billions of dollars.
Yeah. It, just like with the dot-com bubble, it's not like they destroyed the internet, but in the process, some of these firms didn't make it, and some were not profitable for a long period of time. Eventually, they survived. Something similar is going to happen with AI. It, I cannot guarantee that all these data centers will be productive going forward and profitable, rather. But certainly, investments in chips, investments in speed, in computational efficiencies, in data that you need to train all these large language models. These are all productive activities. It doesn't mean that every single investment of this type will be profitable, however. It's
Mm,
part of the process as new technology is established and proven, and its use is expanded. There will always be some investments that will not make it into the profitable side.
that makes sense. Maria, what about the potential? I'm just throwing this scenario at you of the increases in productivity that increase output per worker per unit of labor, either by increasing output or by decreasing labor, that themselves has an impact on fertility. So, people going to the work, historically, men have factory jobs. There are fewer factory jobs. They're unable to uh, get married, attract a woman, have a wife, have kids. So that maybe increases things. Likewise, this internet makes everyone so much more productive, and in terms of nominal GDP, people are spending more times on their phones. They're talking to each other less. Less likelihood to get married as well. Is there potentially a negative feedback loop there, or am I just being paranoid?
I think too much use of online applications and less human interaction certainly doesn't help the mating side. But other than that, all these developments could also free a lot of time for people to have a better work-life balance and therefore be more inclined to have a family and children. The question then is that you also need a very serious study of the social consequences of the use of this technology and how governments and policies can really mitigate the unintended consequences of these technologies on the society, which are going to have an effect on fertility rates as well. When these technologies are first introduced, they usually displace people. And so you need some governmental interventions there, either to slow down the application of these technologies in certain sectors, encourage them in other sectors, and so on and so forth. So think about the autonomous vehicles. This invention has been around for a few years. We don't see them everywhere in the streets of the US or in Europe. And maybe that's a good thing, because at the moment there is a whole group of people whose occupation is to be drivers. At some point, these people will reach retirement age, and maybe that's the right time to encourage those vehicles to be used more widely. And hopefully by then they will be improved sufficiently to make them even more safe and more reliable, and so on and so forth. And in the process, you discourage other people for getting into this profession, and instead getting into other areas where there may be more demand. If you all of a sudden allow this substitution of drivers by autonomous vehicles, then you're creating unemployment among people that may be less able to find an alternative job, especially if they are at the relatively, late stage of their working life.
Yeah, and how seriously are you taking the threat of mass unemployment that rather than AI and all this productivity increasing productivity by output going up, it increases productivity by inputs going down, namely human workers?
I think what we're going to see as in all this, with all these technologies, is structural unemployment, not necessarily unemployment as a whole, but there will be certain sectors that will be hit harder temporarily. And then there will be new set of skills that people would need to acquire in order to re-enter the job market, and that will be easier for younger people than for older people. So usually you have this societal effects, and so that's where social policies come in to smooth out those effects, either by creating programs to retrain these people and reintroduce them in the job market in the appropriate fields, or by supporting them if they are not able to do that, tax the robots or tax the capital at appropriate levels, because effectively that will also lead the capital to gain a higher share of the GDP relative to labor as labor shrinks over time. You may have policies that allow labor to earn more per unit of work hour than before. So there are all these considerations that need to be taken into account to mitigate the societal effects. But if applied correctly, we can very well see an increase in GDP per capita with the appropriate use of technology, even if the population as a whole does not expand, but it shrinks.
Well, Maria, you've given us a lot to think about. I think this is an incredibly important topic, and I'm embarrassed to say this is the first interview I've done on this topic for this show, Monetary Matters. So hopefully it won't be the last. Maria, people can find you on LinkedIn. We'll include a link to there as well as about to your work at the Pictet Research Institute. Thank you so much for coming on. Thank you everyone for watching. Please leave a rating and review for Monetary Matters on Apple Podcasts, Spotify, and also subscribe to the Monetary Matters YouTube channel.
Thank you for having me, Jack. It was really wonderful to talk to you about our work.
Thanks for watching. Remember to click the link in the description to learn more about the Teucrium Agricultural Fund Benchmark Index. Until next time.
Thank you. Just close this door.